How will the housing bubble burst? Hey everybody, my name is JJ. You're watching Bull Boom Bear Bust. It's time to get back into the housing bubble topic today. And we've got some really good data, some updated numbers and charts to go over with you today. Now first let's talk about the title of the video. Is there a housing bubble? Well, some people will argue that there's not a housing bubble. All right, so think about the word bubble. The word bubble means that something is inflated. And the common belief is that at some point all bubbles burst. So it always goes back to the monetary structure, because look at some countries where hyperinflation occurred, or was where hyperinflation was engineered. Home prices never came down. The bubble never burst because the currency became so devalued that everything, including homes, continued to go up in price. Now, what really no economist knows is if and when the housing bubble will burst. Some people have been predicting that this bubble would have burst 4 or 5 years ago. Many quote unquote experts predicted that. Now, let's take a look at a recent article. This just came out October 11th, the day that I'm recording this. And this is out of In Our Capital Matters. How will the housing bubble burst? So when you look around, you see the phrase housing bubble being used quite often. So a lot of people do believe and come to the conclusion that there is a housing bubble. But the problem is, we've been seeing articles like this for years. Many well-known publications with economists, writers that have been in the game for decades have said there's a housing bubble. But the problem is they've been saying it for years. So where does it end? Well, let's take a look at some charts today and just kind of let our eyes do the thinking for us here. The first chart here is going to be the annual change of the FHA home price index. And we look to the far right here and we see the current run up in home prices over the past couple years is unprecedented. And we're looking back about 50 years here on this chart. You see, the Great Sickness, it brought about something we've never seen. It brought about a severe supply chain disruption or crunch. And also record amounts of liquidity and rescue money was thrown at the markets and also the lending and the financial institutions, allowing banks to continue to give out loans when essentially there's a lot of uncertainty. And banks really, if money were real, it would have the banks pulling back on this lending. When there's a lot of uncertainty, typically banks don't want to lend unless they know they have an endless get out of jail free card, which they do with the money printers who have promised unlimited endless liquidity for the banks. So therefore, the banks did not pull back on the lending. And what happens when banks loan out money? Prices continue to rise. When banks pull back on the lending, when lending standards tighten, or when banks are fearful of default or a wave of defaults from their borrowers, then banks will also pull back on the lending. But that's not happening. And in fact, as home prices go up, the money printers are being even more accommodative. The next chart, this is the Case-Shiller home price versus mortgage rates. Now on this chart, mortgage rates are actually inversed. That way they can show the rise in the home prices with an upward slope on the mortgage rates. So in this case, lower mortgage rates equals a higher line on the chart, and you can see how it really correlates strongly with the Case-Shiller home price index. So it's no secret that the lower the mortgage rates are, that the more home people can afford. The question is, how much lower are they going to push mortgage rates? And yes, they are being pushed lower. These are not natural or organic forces. This is steered by the money printers' activity in the treasury market. And that's the big reason why so many economists have been guessing. They've been wrong for many, many years, because how can you predict an engineered or a steered economy? How can you predict an engineered or steered market? Well, you can't unless you know exactly what the plans are of the people that are doing the steering. Here's an example. Have you ever seen a car chase where the cops are chasing a car? Maybe it's a drunk driver. or just somebody trying to get away from the cops. Do the cops know which direction the car is going to go? Can they predict exactly which way the car they're chasing is going to be steered? No, if they did, they can just go to wherever the location is that he's going to go, and they could cut him off at wherever he's headed. So no, the markets are the same way. Nobody exactly knows what the people behind the wheel are going to do. Which way are they going to turn? Which direction are they going to take? All right, here's another chart here. This is the 10-year Treasury note versus the Fed balance sheet. You can see exactly the correlation between the two. Right? The money printers, the Fed, they have endless amount of money to prop up these markets, to manipulate rates. Right? So it goes all back to the monetary system. It always goes back to this. When you can create unlimited amounts of money out of thin air, markets can be steered to infinity. And in fact, it's possible that home prices could double from here. Am I predicting home prices to double? No, but theoretically, technically, they could double. I think that something's going to happen to pull the plug on the money printers. It could be something legislative. It could be some sort of other disaster or natural disaster even. There are a lot of things that are boiling beneath the surface right now, the banking system, that a lot of people just don't get to see just in their everyday operations. And for example, there's talk of a digital currency being rolled out. You won't see it on the nightly news, most likely, but it's certainly being discussed by those that are in control. What's a shift to a new monetary system going to do to prices? Well, if it's more digital money that can be created out of thin air in unlimited quantities, then you're likely going to see prices continue to rise. Most of the population continue to be buried in debt, living a life continuously working to pay off debt. And that's why us here on this channel, we have to be ahead of the game. We have to ride the bull and make money from this inflation. And I'm happy to say that over the past few years, assets, including digital assets and even hard assets that I've purchased, have done really, really well. And we have to continue to look for opportunities. Here's the last chart right here. This is new houses sold versus mortgage rates. And if you look to the far right here, we see the blue line, the number of homes sold has dropped. And this is unprecedented. And we have the supply disruptions that we didn't have in the 2007-2008 financial crisis and that housing bubble. So yes, history does repeat itself, but there's always some very big twists. And this time around, it's a very big twist. So is there a bubble? Yes. Does it mean it's going to burst next week, next year? No, because it's engineered and it's steered. So try to prepare for both scenarios. Make money with the inflation, with investments, but have some cash and purchasing power available for the inevitable deflation and the plug being pulled from the money printer for whatever reason. And that way you're going to win no matter what. And that's what we do here on this channel. We prepare, we look for ways to survive and thrive during this economic mess, during this economic steering that no one really knows where the drunk driver is headed. Thanks everybody for watching. Stay well, stay safe, keep stacking, stay prepared, stay positive. Bye for now. Peace.